The psychology of trading focuses on the mental and emotional challenges of trading, arguing that a trader's mindset is often more important than technical knowledge or market strategies. Steenbarger, both a trader and a psychologist, blends real-life examples, research in behavioral psychology, and practical exercises to show how emotions shape decision-making and trading outcomes. The book is designed to help traders recognize destructive patterns, improve self-discipline, and turn psychology into a competitive advantage. Key themes and concepts. Emotional awareness. Trading is emotionally intense. Fear, greed, frustration, and overconfidence can distort judgment. Steenbarger stresses that understanding your emotional reactions is critical to controlling them, rather than being controlled by them. Behavioral patterns and pitfalls. Many traders make repeated mistakes, such as chasing losses, overtrading, or holding on to losing positions too long. Identifying personal behavioral patterns allows traders to interrupt these habits before they compound. Journaling and self-reflection. Keeping a detailed trading journal is central to success. The journal should record not only trades but the thought process, emotional state, and reasoning behind each decision. Reflecting on these records helps identify weaknesses, triggers, and opportunities for improvement. Discipline and routine. Consistency in process and adherence to a trading plan are more valuable than perfect predictions. Steenbarger emphasizes that discipline is not about rigidity but about acting according to strategy even when emotions run high. Learning from losses. Losses are inevitable. Traders who treat them as feedback rather than failure can adapt and improve. Emotional reactions to losses, like panic or revenge trading, are often more harmful than the loss itself. Flow and optimal performance. The book introduces the concept of flow states, periods of deep focus and engagement where traders perform at their best. Flow results from preparation, self-awareness, and aligning mental state with trading tasks. Achieving flow consistently improves decision-making and reduces impulsive mistakes. Using psychology as a competitive edge, Steenbarger argues that emotional intelligence, self-awareness, and disciplined habits are the most reliable predictors of long-term success. Traders who master these elements gain an edge over others who rely purely on strategy or technical analysis. Practical takeaways. Recognize and manage emotions instead of ignoring them. Track both trading results and mental states through journaling. Develop routines and habits that support disciplined decision-making. Analyze losses carefully to learn, not to punish yourself. Seek flow states for enhanced focus and performance. Treat psychology as an integral part of trading strategy, not just a side skill. Conclusion. The psychology of trading is a guide to understanding and mastering the mental game of trading. It teaches that success comes from controlling your mind, learning from mistakes, and cultivating emotional resilience, rather than chasing perfect predictions or market secrets. Traders who adopt its lessons can make smarter decisions, stay calmer under pressure, and turn psychological mastery into a consistent advantage.